Be very careful because, as you said, should the Iranians decide to try to cut off shipments in the Straits of Hormuz, then that could push oil prices at or above $100 per barrel. If this oil shock does tend to last longer and be sharper in its price response, we're reminded that many recessions in the past have been triggered by oil shocks. Because if you do see a tremendous increase in oil prices, what is it, for every $10 increase in the price of oil takes off about 10 to 20 basis points from real GDP.
Oil just had its biggest spike since Russia invaded Ukraine. It moved 8% in a single trading session. That's massive. Your gas prices are about to explode, but that's just the beginning. Because what's happening right now could trigger the most devastating oil crisis in modern history. And there's one narrow waterway that holds the centerpiece in the international oil trade. On Friday, June 13th, crude oil rocketed from under $70 to nearly $75 per barrel. Brent crude, that's the global benchmark, kissed $79 before pulling back. Wall Street opened deep in the red, wiping out gains that took weeks to build. Why? Two words: Israel and Iran. The Israel-Iran war began with Hamas's October 7, 2023 attack that killed 1,200 plus Israelis, and with Israel accusing Iran of being the puppet master controlling Hamas, Hezbollah, and other proxies. The shadow war became direct when Israel bombed Iran's embassy in Syria in April 2024, prompting Iran's first-ever missile attack on Israel. On June 13, 2025, Israel struck Iranian nuclear facilities and killed Iran's top military commander. Iran retaliated, and now both countries are trading direct fire. This isn't just about higher gas prices. This is about a geopolitical chess game that could disrupt global oil supply. Energy analysts like J.P. Morgan are warning this could be just the start. If this escalates, we could see another 4 to 5% spike, pushing oil toward the $100 mark. Why? You asked. Because of a narrow waterway between Iran and Oman called the Strait of Hormuz. It's only 21 miles wide at its narrowest point. Here's why this strait is important. Nearly 20 million barrels of oil flow through this tiny strait every single day. That's 1/5 of the world's oil supply squeezed through this narrow waterway. If Iran decides to block this channel, analysts say oil could blast past $100 per barrel in a very short time. Now here's where this gets really interesting, and why this crisis could be far worse than anyone realizes. Over the past few years, China has been quietly becoming Iran's biggest customer. We're talking about discounted, sanction-ridden crude that China has been buying up like crazy. Iran now supplies a massive chunk of China's energy needs. So what happens if Israel decides to target Iran's oil infrastructure? What happens if they hit the Karg oil terminal, Iran's main export hub? China's energy supply gets cut off overnight. And when China's manufacturing slows down, the entire global supply chain collapses. Let's unpack what energy analysts Sam Stovall and Carl Mikshan says could lead to a recession if the war escalates. Don't forget to like, share, and subscribe for in-depth market commentary and commodity analysis. Let's dive in.
Be very careful because, as you said, should the Iranians decide to try to cut off shipments in the Straits of Hormuz, then that could push oil prices at or above $100 per barrel. If this oil shock does tend to last longer and be sharper in its price response, we're reminded that many recessions in the past have been triggered by oil shocks. Because if you do see tremendous increase in oil prices, what is it, for every $10 increase in the price of oil takes off about 10 to 20 basis points from real GDP. So high oil prices could end up being a bit of a lid on economic growth.
Expert Sam Stovall suggested that without tremendous escalation from this point, the premium currently enjoyed by oil prices could quickly reverse. However, if things were to escalate further, oil prices could continue to rise. Oil prices are a critical factor to watch due to their impact on the economy and inflation. He adds that the overall outlook for the energy sector is still questionable. However, due to the potential for an oil shock, we must be very cautious. Should Iran decide to cut off shipments in the Straits of Hormuz, oil prices could be pushed to or above $100 per barrel. An oil shock tends to be sharper and longer lasting in its price response. We're reminded that many past recessions have been triggered by oil shocks. A tremendous increase in oil prices can significantly impact real GDP, with every $10 increase in the price of oil potentially taking off about 10 to 20 basis points from real GDP. Therefore, high oil prices could act as a lid on economic growth. Let's hear what geopolitical expert Carl McShane has to say.
Iran does next here. Some say their options are limited. So what if one of those options that they choose, and we've seen this from them before, is to kind of mess around in the Strait of Hormuz, as you were talking about, that's where the analysis comes. And a number of analysts have mentioned this, saying that you could see $100 oil. Now, what's slightly encouraging this morning is that, to your point, we did go up to 74 on what West Texas crude, which is the benchmark here in the United States. Now we're back under 71. As I'm looking at it now, it's only up by 6%, with the market, the stock market, down not by as much. So we've come off of those highs in the overnight when we had the 7-8% gains. I think that's a pretty good sign, because people are looking at it, and maybe the worst fears in the short term, which would have been a strike on Iranian oil facilities, the nuclear facilities were the target, do not seem to have necessarily come to fruition. But the Strait of Hormuz, that's where we're watching. And if there's something that happens there, and again, that's been a place where Iran has gone to in the past, then you have the disruption you're talking about. By the way, most of, if not almost all of Iran's oil, like 90%, goes to China. Iran's good for about 3 or 4% of the world's oil supply, but China gets about 10, 12% of its oil from Iran. So that's the place to watch and how all of this comes together. I think vis-a-vis China and the oil trade, that's where it matters, because if you take 10 or 12% of China's oil supply off the table, that's a big blow to China. Obviously, would be big for Iran as well. Again, the Iranians don't really account for much of the rest of the oil, like coming to the United States or to other countries in Western Europe. It's really they send about 9 of the 10 barrels that they put into the market into China. So again, that's the place to watch. But again, so far today, we've been able to avoid the worst. A 6% rise, though, in global oil is going to have an effect at the pump here in the United States.
The next 48 hours could determine whether this becomes a minor market hiccup or a major global crisis. We want to hear from you. Are you already feeling the pinch at the gas pump? How high do you think oil prices will go? Drop your thoughts in the comments below. We read every single one. And if this analysis helped you understand what's really happening behind the headlines, smash that like button and subscribe for more insider financial analysis. Because in times like these, information isn't just power, it's profit. Remember, the markets never sleep, and neither do the forces that move them. Stay informed, stay prepared, and I'll see you in the next video.